Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey guys, we're on. Had some difficulties. Almost had heart.
You're a little bit. Your voice is a little bit messed up. Can you hear me? Okay.
Yeah, I can hear you. Okay, mine's messed up. How?
Yours seems like it's a little bit off, but it's fine.
Is it too off? Okay.
I do most of the talking.
Yeah, I was gonna say I don't talk much, so it's fine.
All right, all right. Well, hopefully we have some people on. Maybe let's ask everyone. Can you just put a comment? Just say yes, you're here. I see a few people, but is everybody here? Can you hear us? All right. Well, we're gonna go and tape this. We're gonna go and tape this, and then we will see. If people miss it, then people miss it. But all right, let's talk about a couple of things. So I wanted to start off really talking about Tesla. Tesla yesterday, there was a very large trade in the market, and in that market, in that trade, it caused this big hoopla across the media, and it was. Frankly, part of it was the reason why the market sold off yesterday, right? Tesla, we talked about it, a leader in the market trading down, is going to have some ramifications for the downstream of these Momo names. So let's dig into that a little bit, because I think it's very important. It's very important to understand what we're doing. Part of the reason why we're doing this podcast is to help people understand what UOA is, how to use UOA to your advantage, and how to understand it, how to make sense of what you're doing. So you're not just chasing or running after something that someone says, go do this or go do that, and you can start thinking for yourself. That's the main reason I'm doing this for you, and the main reason I built OptionsGeek, to help people think for themselves. So let's look at the facts. The market opens up yesterday, and let's just look at let me share my screen here so we could just sort of go through what transpired yesterday and go from there. So you see my screen?
Yes.
So I'm going to put on the candlestick. Let's go 5 minutes just to see. Okay. So in the morning, the market opened up and then traded sideways for about a half hour, 40 minutes before selling off. We see that, right?
Mm-hmm.
Okay. Tesla, we saw, and we talked a little bit about it during the podcast, was traded down for the first half hour, and then really sold off hard. Was down 4 or 5% when we were about here, but had traded all the way down to about 800. Okay, so at 1037, so right around here, let's call it, there were 223,000 of the this March expiration. So in about 5 to 6 weeks, 5 to 6 weeks, the March 20 strike, the March 20 strike puts, okay, were bought 223,000 times for 2.5 cents. Fact. Okay, that's a fact. Okay, the next fact I would say is that every one of these services, if you will, these alert services, are all sending out these tweets, social media, stock tweets, even Facebook, wherever. Everyone is sending out Twitter stock tweets, Facebook tweets about this particular trade. And along with the tweets, you're hearing things like a reverse gamma squeeze.
Okay.
You're hearing, people have heard gamma squeeze with GameStop, so it's fresh in people's minds. But you're hearing reverse gamma squeeze. You're seeing big flow, and it's loud, if you will, these tweets. It's, hey, are you seeing this? Did you check this out? Oh my gosh, did you see what they're buying here? 226,000 options traded right here. Now, If you're new to UOA, you're seeing that, 10,000 will follow things, 5,000 even, 15,000. So when you hear 226,000, it's eye popping. It's eye popping. And so it's something that now so many people are looking at to try to grab an idea or figure something out. People are day trading it. People are doing different ways. I personally we're teaching UOA in a way that's a little bit slower, a little bit more trying to be a detective, trying to do some research. So these are the facts. This is what happens. Okay. The stock trades off 5%. That's a fact, 5-6%. And we're left now that the media is making comments about it. Yesterday, CNBC even said there was a big trade. Okay. Let's dig into what's actually transpired. Okay. Because I have a flip side of that story. Okay. The flip side of the story is that people at a high level understand what a gamma squeeze is. At a high level, they know that if you buy these out of the money calls and as the stock moves closer to the strike, the investment banks or the market makers have to buy more stock for calls. If you're doing it puts, the same thing. As it goes down, they have to sell more stock. High level, okay, that's one. It's important to look at how much money was spent, because when I look at 223,000 shares, it's much different when you buy 223,000 shares of a $3 option, $5 option, than you buy 223,000 shares of a 2.5-cent option. The total amount that was invested was $557,500. Okay. In that trade, I see a couple of clues the way I look at it. It's odd that somebody would buy 223,000 options. That's a little bit odd. Why 223? Why not just 200 or 250? Why 223? That's first. Second, why March? March, it's 5-week options. And third, why the $20 strike put, right? So you have a lot of different things going on here. The total amount was only $557,500. It's not a lot in the big scope of things, okay? But if I believe that with $557,000, I can trick the whole market into thinking, oh my gosh, there's this big put buying in Tesla and it's going to go down, and this is the beginning of what happened in GME. This is the reverse gamma squeeze. If I can do a good job convincing people, then all these people that are following UOA just because 223,000 trade, then I'm going to follow. I'm going to buy puts too. And if they bought the March 20 puts for 2.5 cents, the March 100s are only 9 cents or 10 cents. I should buy the March 100s. And so and what happened was you got another 100,000 to 200,000 puts in that particular month bought right afterwards. People spending 20 cents, 30 cents, 40 cents, higher strikes, whatever they're doing. Okay, factual. These again, factual. Now, again, if I'm someone that has $10 million and I want to play this game, what I could do is I could buy those 223,000, but before I buy them, the thinking is I could just buy the 840 puts, the 830 puts, the 820s, and the 800s. And in fact, if you actually look at the tape, those puts were being bought right from the get-go. From 9:30 to 10:15, those puts were being bought like rapid fire, okay, across all of those strikes, specifically in the 800 puts, okay? If I spent, let's just say I said, all right, I'm going to spend $10 million buying puts, and I know I'm going to buy 2.5 cents. Now, I might have went to, say, Goldman Sachs did your trade. I might have went to Goldman Sachs the day before, 2 days ago. Say, if I wanted to buy 225,000 of these, where would you sell them to me? Be like, well, first question is Goldman Sachs, why would you want to buy 220? I just want to, make sure I have some bonds, and I just want to make sure I get my payment, whatever, some capital structure, some reason, whatever the reason. We'd sell them to you at 2.5 cents. Okay, no problem, thanks. So now I have that part set up. Now I just got to get the puts that I need in the morning. So I might buy February 12th, Friday puts, 840s, 30s, 20s, right at the get-go, buy as many as I can, up to spending $5-10 million bucks. Okay. And then when I do this trade, I then need to make sure it's broadcasted to everyone. Okay. So how can I do that? Well, on Reddit, you could have 30 different accounts. You can have a bot that just keeps going on every single Reddit channel, including Wall Street Bets, you can have Facebook groups. You can just have it all lined up Okay, it doesn't take that much, and just start pressing a button and everything is being, hey, did you see this? You're not telling anything. You're not telling anyone to do anything. You're just saying, did you see this? 226,000. Did you see it's in Tesla? Did you hear about a reverse gamma squeeze? All of a sudden, people start talking about it and asking it. What does that do? It causes people to short, causes people to buy puts, causes people to sell out of longs. Okay. Within an hour, those puts, let's just look at one, the 800 puts within an hour went from $3.50, $5, where people were gobbling them up from 9:30 to 10, 10:15, $9.30, $5, probably an average of 4, traded by 10. The trade happened at 10:37. At 10:45 a.m. was the high in the 800 puts. The February, this week, 800 puts at $24. So that means if I bought $10 million worth of options, let's say 5 million in that one, just on the 800s, I could have probably, I'm scaling out as it goes up. I could have made 10 to 15 million dollars for an hour and a half of work. So when I say that you have to be careful, I mean, this is the tricks that I don't particularly say anything illegal about if that's what happened. You know, all I'm doing is making sure everybody sees my trade. Right? There's nothing wrong with that, right? I'm putting out there. I think Tesla's going to go down, and maybe it goes down to zero because it could be that something happens to Elon Musk, and who knows, right? I just think it's going down, and then I want to make sure everybody sees that trade, and then everybody's going to follow that trade, causing the stocks to go down. I think somebody did that, and somebody made 15 million bucks. Now, why would I even think that? Well, first, the gamma squeeze doesn't make sense. So to understand gamma squeeze, and I keep going back to this Robinhood video, evergreen video that I did on the site. I think it's very important. First of all, you're not going to learn options in an hour. Second of all, you're not going to learn, the mechanics of options even in a couple hours. But what I did in that 45 1-hour episode, 3 parts, was to try to show you how it all works as best I can in the shortest amount of time. And what you'll learn there is that yes, it is true. If you buy out of the money options, at some point, as the stock gets closer to the out of money strike, more stock needs to be bought or sold for puts to get closer to that strike. And when it goes through it, it keeps on climbing and you're buying more and more stock. However, in the process of trying to create this to happen, there has to be some level of, it can't just be the $20 put in Tesla. It's $830 out of the money. There is no gamma and there is no delta on that trade. So it's just a 2.5 cent option. If it hits, it hits. I would tell you that even if Tesla fell in half, got cut in half over the next 2 weeks, so it went from 850 to 400, I would tell you that the gamma and the delta on that option is still probably close to zero. Okay, so there's really no effect. You'd have to get that option, that Tesla, all the way down to 100, and then maybe you start picking up some deltas and some gamma. And so it's a silly trade. The only purpose of that trade is to create drama, is to create some sort of effect on people who don't understand and don't know, and to just follow because 223,000 options traded. But in the meantime, as everybody's following even just a little bit, you have call it 2 million people following, 1 million people following you away, and 1 million people decide, oh, I want to just buy one lot of puts, or another person says, I'll just sell my 2 shares, 3 shares. You start getting a lot of pressure in that 10 minutes. And you can see, if we look at the chart of Tesla, you can see all the volume. Remember, this hits at 10:30, 5:37, and you can see the volume here is 700,000, 600,000, 500. There's a lot of volume here, and actually a lot of volume going into the trade. Okay, so this looks like pressure being done by the actual buying of puts, and then you got 1 million, call it 1.5 million of shares in a 5-minute period. That could be used, the shares could be used to cover. So they don't necessarily have to sell the puts. They could just cover it with the stock. They can buy all this and just buy the stock to cover. They basically could have made, let's call it 3-4 times their money in a matter of 10 minutes. So I think, and then everybody else is now waiting for this humongous Tesla sell-off, which maybe doesn't even happen. Also, it happened to be in, I showed you yesterday, that this also happens to be an interesting technical level where it had this diamond that we showed yesterday and it broke through that. Okay, so this is also breaking through the diamond, causing a technical break here, adding more fuel to the fire, and then you have this huge trade. It's silly, that trade. But I'll tell you that, has it happened before? Does it happen? I think it's going to happen more and more. I mean, the hedge funds now understand how big this community is. They can play these games all day. And one, I remember the same type of trade with a similar type of story. I'll give you an example. In 2000, I believe it was 11, 10, 11, 12, the regional banks were starting to take off, or it looked like people were getting bullish. The ETF was only $6, called $6.50. And someone came in to buy 2-week options over a period like this, a 2-week period where their next week there was this huge conference in the regional bank sector, huge conference. They were going to talk about going forward. And there was a trade that went up twice. It was 100,000 and then 100,000. The person paid a nickel. Okay, so the person paid a nickel. 100,000, 200,000 times paid a nickel. So that's the equivalent of what is that? It looks $1 million. 200,000 is 20 million, $1 million. Okay, so $1 million they paid in order to get everybody to believe that the regional banks are going to collapse next week. They're going to announce things. And now, not only did this trade go up, where you flashed 100,000, a nickel, and everybody's like, oh my gosh, you're still traumatized from the crash. Okay, it's 2011. You're thinking, okay, they're going to roll over here. And there's this event next week. And clearly they're targeting that event next week. And then the icing on the cake was John Paulson is buying these. So usually you don't hear that. Usually you don't know who's actually buying this. So now they're actually telling me, oh, John Paulson is buying this, right? It's just not allowed. You don't do that. I never, nobody ever talks about who's actually doing it, right? You'd be fired from the investment bank if that came out. Unless John Paulson wants people to know that he's doing this. So he's telling and he's saying, everyone, yeah, let's just say that we're doing this. The more people know, the more people got scared because John Paulson called the financial crash. He made $30 billion in the crash. And so his name and his idea carries a lot of weight, especially when he just called the crash. And now he's doing it again, buying nickel puts. Wow, scary. Everybody reduces their position. Not everyone, but a lot of people reduce their positions. A lot of people following you away at that time are buying puts. And you know what happened the next week? The regional banks announced like blockbuster, earnings going forward. Everybody's positive. The stock goes from 6.5 to 8. Everybody's crushed. Shorts are crushed. Anybody who stayed long making money. But, remember, stocks are like water, right? They're going to go to the least resistance. In order to go up, you have to get some of the people out, and then it'll go up more, right? And so same type of trade, same type of scenario. So when I see something like this, and when anybody on this podcast or anyone that's at OptionsGeek sees something like this, just make sure we're learning what we're doing here. And, gamma, the gamma squeezes are valid ways to try to play the market. However, if it was so easy to do, it would be done day in and day out. Now there's this group of people that there's 1 million of them. It's this huge crowd that's willing to follow what one or two people say because they're not completely educated. And so when you have 1 million people that are just going to follow, there's a lot of damage that can be done. If I have a good story, I just put it out there and then all of a sudden 1 million people buy and the stocks go up and you could just sell right into it. Okay. Similar things seem to have happened with silver, right? Good story. We're here talking about that story and saying that's too good of a story. Like whoever wrote that is really clever in how they wrote it. You could see the writing and it was very clever to lead people. And so you have to be very careful. So what people have asked me a lot, I've had a lot of emails about this Tesla put buying and what does it mean? And oh my God, is this going to collapse? It could have just been tomfoolery and somebody just took 15, 20 million bucks for an hour and a half days of work. And that was it. They literally just made their made their 2 years. It could have been a trader at a bank that had the ability, had the capital, and gets paid out on something. It's just, he just made a couple $1,000,000 for himself. Didn't do anything except make sure everybody knows. What you could do, by the way, is to get it out is the guy could also say, I did it through, say I'm at the hedge fund, I did it at Goldman Sachs. I could also call Deutsche Bank and say, hey, did you guys see these? Meanwhile, it was me. Did you guys see these 226? What do you think about that? It's crazy. I'm hearing crazy things. What does he go through? He goes and tells 5 other people. He tells people outside. Now he spread at Deutsche Bank. Then I call Citibank and I call somebody else. Did you see these things? And he just, everybody gets excited and everybody starts talking about it. Everybody's focused on it. What's going on there? So, look, professionals are smarter than the average investor. And so not everyone's going to fall for that for sure. But there's still a lot of average investors, retail investors now that are willing to just, again, 1 or 2 shares when you do it 1,000,000 times is a decent amount. So that's the lesson. That's gamma squeeze. Gamma squeezes need gamma and they need some delta to start. When you have, the whale who's doing, he was in the big cap names. He wasn't buying 0 delta calls. He was buying calls that had some delta and some gamma. And as the stocks were pushed up, that delta and gamma increased, and it was increasing. If he was buying 0 delta 0, like, right now 0 delta 0 calls would be, say, 2,500 calls in Tesla. 0 delta 0, it's an $800 billion. By the way, the last ingredient of this squeeze is that you actually have to push the stock, not just through the strike, to keep pushing it. So GameStop was unique because it was highly short, and it was a small market cap. Tesla's $800 billion. It's now very difficult for a group of 1 million people to just buy one lot and move it. So anyway, move it more than, for a half hour and then until it finds its range. So that's that. So let's get back to the thing. I just wanted to address that. I think somebody just did it to fool everyone. They did a pretty good job. They probably made 3-4x on whatever they invested, and that's it. They're on to the next trade.
It's an incredible story. It's incredible insight. Thank you. And I see a lot of people being really appreciative of
cool
your
cool.
insight. That was awesome.
Good. So that there's just because, there's just a lot of, look, if somebody knows you're following them, right, and it's a money game, it's sort of like, it's like being a spy in one of these movies that I watch, like Homeland. If you're being followed, what do? You just dart to the right, go to the store, and that's what's going on here. So just got to be very careful. We got to analyze. We got to stay calm, look at things, and figure things out. That's why I tell you, what do the options say? Not just the options. What does the stock say? And then what does the story say? And lastly, maybe what does common sense say? Right.
Cool.
And that's what you got to do. Okay.
And now to pick your brain a little bit more, I'm looking at these cannabis stocks. We were yesterday. I was bullish on them. I was getting excited, and I wake up today and I'm like, these are down 30-40%. How can somebody play something like this? This is crazy.
So we talked about the cannabis yesterday. If you're long CGC and you're still long, God bless you. I would have been out a long time ago. But these things, they move, right? So let's look at the board, and you have a lot of these names. Let's just go all first. You have Sundial Growers. Okay, that was. I don't know. I don't even know what's going on. That's a little bit ridiculous the way the options are priced there. But you have Sundial. We have TLRY here. AFA, Aurora. It's dominated. Canopy dominated by the marijuana names. Why? They're going down today. They're getting crushed. But I think what's most important to think about is, what I said yesterday. When you're trading these names, you're thinking, okay, I want to buy these names at 250 vol. See the TLRY 278, down 74, by the way, 278. AFA 231. You're getting to these nosebleed levels on these things. Here's a back of the envelope way to calculate what you should be thinking about. If you're going to pay, yesterday it was 350 in TLRY. If you're going to pay 350 IV, you take 350 and divide it by 16. Okay, 16 is your magic number. 350 divided by 16 is 21.9. Okay, so anybody could do this. 21.9. That's basically saying that the market is pricing in 21.8, call it 22% moves in the stock per day. Now, in the last 3 days, it was moving like that. Today, it's down 40%, but it's pricing in every day 22%. Okay, if you pay 350, that's a lot to move 22%. Okay, for any stock, that's a lot. And it's important to see what you're buying. Now, if the stock goes against you, like it is today, look what happens. Look what they did. Usually, this is odd, right? Usually when stocks go down, the implied volatility usually goes up in general. But here, what the market makers are doing is they're basically saying, it's exactly what I've been telling you over the last 2 weeks to be careful since it's GameStop started. You want to trade these things? Fine. Okay. Yes, they could go from 5 to 50. But you know what's likely to happen at some point? It's like you may not be able to get out, and then something like TLRY happens where it's down 35 points, and you're like, holy cow, my option just imploded. Okay, so the point is that the market makers, they're taking TLRY. TLRY started at 70, 80 vol. Then it started moving, and they said, okay, we're going to make it 150. And then people are still buying it. And they say, okay, you're still buying 150, we'll make it 250. And they're still buying it. And they say, okay, fine, make it 300, 350, 400. Okay, and if you were still buying it today and TLRY was up a little more, they'd make it 500. Whenever you stop buying it, they'll maybe bring it down. They don't want to buy it at 400, 300, but if you want to buy it, that's fine. And what happens is when they also know that everybody's buying calls, okay, so when everybody's buying calls and you're selling them calls and you're selling them 300, 400, 500 volatility, and then the market goes down, guess what they know you're going to do? Citadel knows, they know how many people are long calls, how many people long. By the way, nobody's long puts because nobody's spending $15 for the at the money put yesterday. No, I mean, it's very, very few people would do that, right? And so the reality is that they're selling all of these options calls. They're selling it at 400, 500 vol, and then they know that when the stock goes down a little bit, you're going to sell. You're going to sell those calls. And you can say, okay, I'm out. But they're not going to make it easy. First, the stock is going to be down huge. And then second, they're going to take the implied vol down from 400, 500, 300, wherever it is, 700. GameStop was up to 1,000. They'll take it all the way down to 200. So not only do you lose on the stock going down, but they just deflated the options board too, the whole board. They just took it down and said, oh, the options are a lot cheaper. Why? Because everybody has to sell. Okay, so they make it, when I tell you that Citadel is going to be medieval on people, I'm telling you that they're going to be medieval on people. I leave the last part out because it's part of a movie that I used to love. But at the end of the day, they will not lose a fortune. They're going to make it back. They might have lost some on GameStop, but you know what? Every single time you're trading back and forth, they're going to make that money on these 250 vol. The bid offer is $1 wide. It's like, I don't want to say impossible. Nothing's possible. Over time, it will be impossible. And they know that. They know that you cannot be day trading 350 vol names and actually think you're going to make money over the course of time. You might for a day or two, and then one day you're going to miss and it's going to get crushed. Like everything's going to get crushed quickly. So this is where you have to be careful in trying to play this game. And I would stay away from these. Anything over 250, 300, I would stay away. Look, I in general, I've been programmed to sort of be really cautious at above 50. At above 50, there's nothing below 50 now, or there are very few names. And so, playing this 70, 80, 90, 100 vol name needs precision. I think actually it needs a little bit more time instead of this fast 1 week, 3 week time frame. And so, I'd rather pay 90, 100 vol and say, okay, this is a $10 stock, it can go to 30, and this is why. And I'm going to buy this $4 option, but at least I have 5 months, right? At least I have 5 months for this thing to move around. And time allows you to do that. It allows me to average in. It allows me to hold on my last one. This is where that strategy comes in. This is where your plan comes in to say, you know what? Things are moving around. I'm not going to buy that third until I'm comfortable that this thing is starting to turn a little bit. So if you buy one, it's down. You buy the second one, it's down. Don't buy that third until 1 and 2 are either at least 2 is up and 1 is, you're close to back to where you started. Mm-hmm. That's how you should start thinking about it. So, in the marijuana names, I would say slow down. Like literally slow down. If any OptionsGeek members are playing it, no problem. I have no problem with people trying to shoot, craps at some of these names, but slow down, back and forth on this 100, 150, 200, 250, 300. Citadel is in there moving things around. When everybody's buying, they have the board up here. Remember, I always say to you, it's when Marco's walking into my store at 7:00, and now he's brought 10 friends because they like the ham and cheese sandwich that I make with eggs. So I turn the sign and I say they're $7 or $5 or whatever. The minute you guys are gone, I turn the sign and really can get them for $1, right? And then you come back and say, hey man, I can get some good ham and cheese sandwich from the next guy. Do you want to buy them from me? I'll sell them to you at $4. I go, I'm not paying $4. I actually sell them for $1. You actually pay $5, but you don't know that I actually at 11 o'clock. So this is what's going on. It's a tomfoolery games. So you got to be careful. You got to know what you're doing, research and whatnot. I would stay away from let them breathe for a moment. Let them breathe. Stocks moving up and down $30, 30% even up and down is no good to be sort of jumping in there and trying to, you think you can make money. It's an illusion in reality, because you're paying such a high premiums that over time you lose. It's a little bit of a mirage. So just be careful there. Okay.
Great. Good insight. Thank you. Great. And before we move into, I think, payments and Bitcoin, I just want to tell everybody that we're going to be giving sort of an idea, showing something really interesting at the end. So make sure you stay tuned. It's an interesting spread, and yeah, you'll see it when we get there. So now I've seen a lot of Square. I've seen a lot of PayPal, Visa, MasterCard.
Yeah.
Is it? Do you think it's tied into Bitcoin? You're jumping up so much.
All right. So here, I was looking at that earlier. If you just look at IV up and sort of look here, Riot, Bitcoin, pins, we could talk about in a second. PayPal, here's one, PayPal, Square, MasterCard. Now you're just missing Visa, and that's probably somewhere over here. Is Visa here? Let's see if Visa's here at all.
It was
there. Okay, so it came off a little bit. You have your big names, the news was Bitcoin, right? Everybody's allowing Bitcoin to pay. I think it's great for Bitcoin. Like it's allowing people to use Bitcoin, which is part of the bull story for Bitcoin. But is it that huge for PayPal and these guys, and like that much? I mean, these stocks have moved a tremendous amount. So if we look at PayPal, what I'm concerned about is the earnings on all these guys have really just come out, right? So let's look at MasterCard. Who's left? Visa. The numbers are pretty good. Everybody's in. I like that the charts look interesting. But what I would say is to make a long story short on these, so we can get to the other stuff. There's no event. All of these stocks look like this. It seems more like someone is saying, I'd buy some calls and then let's just move out of stock. A little bit of risk reward shifting here, because I don't see an event. I don't see what people are targeting as, in all of these. The MasterCard hasn't traded that strong. Traded 350. It's back towards 341. So that's not super strong. The Visa, same thing, trades in the morning to 212. It's back down to 208. Again, not incredibly strong. So I'm a little nervous that it is buying calls. This one looks like a great stock chart here, but I'm concerned that it's buying calls, selling stock here. Okay, I don't see huge volume on these pushes. I'm a little concerned that these pushes are they're led because the market is trading near the highs, and these are the leaders. But the volume for me is not necessarily. This one is here. This is good volume, and this is good volume. But when you're seeing calls being reached up here, maybe people are shuffling a little bit. So those are names that are dominating. It's Riot, Mara, PayPal, SQ. These are all in the news because of Bitcoin, which makes sense. But these Riot and Mara, you're talking about 225, 230. Again, very, very difficult to call these things after these stocks have gone from 10 to 40. Okay. Cool.
And now I want to talk about a story that you love. It's kind of been your prophecy, and it's Pinterest.
It's which one? Oh, Pinterest.
Pinterest.
Love Pinterest. I've been talking about Pinterest for a long time, and I've read. I wake up today and I'm like, of course Microsoft wants it. Finally, somebody says it. It comes out. It's leaked. Of course they want to buy Pinterest. Who wouldn't want to buy Pinterest? The reality is that Pinterest doesn't want to sell, and of course they don't want to sell. They're just about to explode, right? They're just about to monetize everything. So right before they're about to monetize everything, somebody wants to buy them. If you were part of Pinterest, you'd say, I don't want to sell right now. What are they going to give me? Look, Microsoft could step in and say, where's Pinterest right now? 70? What's Pinterest market? I think 53. Okay, 53 is still low. LinkedIn, they doubled it. LinkedIn went from like 140 when they were trading, bought LinkedIn. LinkedIn went from like 140 to 80, 90, and then it was a takeout near 200. So Pinterest, Microsoft is big money right now. Maybe they offered them, I don't know when they actually went or asked them or was thinking about it, but maybe they would offer them 50% higher. That's nothing for Pinterest if they can monetize. If they can monetize, it's going to be worth 100 billion, right? Growing 100 billion and growing, and it has a pretty feel good story to it. So, I would be surprised that Apple. I could not see Microsoft just stepping in and saying, you know what, I'd like to buy Pinterest. I think Apple would have something to say about that. I think it fits perfectly with Apple. I've always said I thought Apple was the right one. Apple hasn't really bought a social media company. Microsoft bought LinkedIn, and it's been wildly successful, right? And Google bought YouTube, wildly successful. So maybe the greatest takeover ever, right? So it's obvious, and where can it go? I mean, let's just take a look. People are looking at. Let's see this. Remove this for a second. DD5s here, 8590s. I mean, you're looking at $100 number. I don't see why not. The chart says this is a tremendous chart. It's a tremendous chart. This right here, you know what this was? Remember, this was forced selling probably by Melvin Capital, who owned 12 million shares and 20,000 calls. So this right here was a sale, and then they just gobbled it up and then took it right here into earnings. Before the earnings, the options were pricing in 90, 95. I don't see why it couldn't get towards 90, 95, 100. Give me a few days in the market that are positive, and SPY getting close to 400, you could see this trading a lot higher. This is to me one to own. If it ever comes back down into the 60s, 70s, I mean, I just think that something would be really, really wrong. And maybe that's the opportunity, but this is more of this is a strategic asset. Even Twitter, even Snap, all of these are strategic assets if they have good user bases, good engagement. It's all strategic assets. It doesn't matter that it's not an earnings story. These things don't matter. Earnings does not matter for Pinterest. What matters is that the people on there are spending money. They're good. They're good users of the product. They're engaged, and they're also probably in Pinterest. They're higher income bracket people. So I think this is a great story and love it. That one. And it's the three that I love: ATVI, Pins, and General Motors. Those are three stocks that I think are tremendous.
Nice. Three horsemen.
The three horsemen, yeah.
Yeah. All right. And did you notice some chips action today, and as well as Western Digital, I think?
Yeah. So there was a Morgan Stanley channel checks. They said something positive. Look, the chips. It's been a little confusing for me why they haven't gone up. I mean, there's a shortage of chips. I get like in the next quarter they might not sell as many chips, but if you're selling something, widgets, and you can't, the demand is there, but you can't make enough to meet the demand. To me, I would say that's pretty damn good. So I don't see why these things aren't going even higher. I guess maybe think people they're gonna overbuild. I don't know, but these things, we've been seeing Micron call buyers from, let's call it the beginning of the year. Even the end of the year, we're seeing Micron call buyers. They don't make it cheap to buy these things, but they've been shooting back here. They were shooting towards 95 in the stock. It's trading 85, back at the highs again. And again, everything within the chip sector, besides the fact that they can't actually make them fast enough, is pointing to a very bullish upside. You can't make enough auto chips, can't make enough, we're about to spend, the government's about to spend, 1.9 trillion giving money to businesses, clean energy, all of this stuff. Every parts of industry and building out industry requires chips. So the automotive industry has taken off a lot faster, I think, than people expected. And so that has put chips in higher demand than people thought, and there's a shortage. So net, it's super bullish. And you look at Micron today, Western Digital, Micron, Western Digi were both spoken positively by Morgan Stanley. But again, let's go to weekly. It's just difficult in this market to keep reaching. And, you're going to get a 5% pullback on these things. And this went from 50 to 63 in 3 days. People buying calls here right now, looking possibly for something up here. And let me tell you, chips can do that. In a bull market in chips, they can do that. Like commodity bull market, they can do that. But, speaking of commodities, same thing we're seeing, yesterday we saw FCX. And again, today the stock is off a little bit. It's a little weak. To really be weak, it's got to be starting to trade down here, maybe break to 50. But it's not trading rah. Now the market is trying to gain, get some steam back here in the second half of today. But we'll see how this plays out. So I would say the chips are in shortage. I think it's good for business. Not good that they can't make them, but in general, good for business. I think a more interesting story that has fallen apart in the near term is TEVA. I told you that
yes.
I think you played it. I didn't play it, but we're waiting here. And I read the earnings transcript yesterday, and I would invite you to read that. You should read that to understand, even if you're not in it anymore, read it. And I think one key part of the TEVA story was that he was bullish on a settlement. It seemed like he said they specifically asked him in the Q&A. Remember, on these earnings, I read the CEO, glance through the CFO. He talks about the numbers, and then I do read the Q&A. I briefed the Q&A. I'm looking for good questions. And somebody asked him about the settlement, and they said, given the environment where it seems like there's a lot of chatter, positive chatter about a settlement, which I didn't know. And so we speculated, but now here's an analyst actually saying that. So, okay, so there is positive chatter about a settlement. And he was very bullish in his tone, saying, we are considering settling, like we're looking at it. And yeah, he's bullish on it. He said that the legal system has basically come to a stop over the last year because of COVID. It's still like that, frankly. And he said he's not bullish on timing. He's not bullish on timing. So, given that people, they were basically flagging to us what? They were basically saying to us that TEVA could actually get to 16, 17, 18, because those were the calls they were buying. That's what they were telling us. They were telling us that it's probably going to get up to the high teens on some sort of good news. Well, now I have a stock that's down, traded up to almost 13.5, I think. Now is down at 11.30. If I'm long the stock, instead of just playing around in the short term, I think I can look at the Januaries, and someone looks like they did something like that today. I can look at the 20. I was looking at the 20, the 12-20 call spread.
Let me tell everybody the story. So Felix and I got on a phone before, and it was like 11:45, and he was telling me, "Look at this, dude. January 2022. Take a look at these 12/20s." I'm like, oh, "Okay, cool, blah blah, but whatever." And then I just got in at around 12:30. I'm looking at it, I'm like, "Dude, did you buy these? Like almost the exact same trade, 44." What happened? And I was just blown away how you predicted that, like crazy.
So this is what I used to do, right? I would talk to, if you're talking to the big money guys who have 10 million shares of TEVA and they were trying to play, they thought there was a settlement, I would have said this yesterday, but because I'm looking at it today because I see it's down again. But at the end of the day, if someone's long a lot of stock, you just say, look, the CEO is telling you he's not bullish on time. He says he wants to sell. He's just not bullish. Get the courts open. He's got to get a lot of people involved to get everybody to be on the same page and settle. He's willing to do it. It sounds like that's what he's trying to say. And now it just takes time. Okay, so do you want to watch an $11 stock float around until the next earnings and the next earnings? No. So why don't you just take? In this case, they paid $1.25 for the 12-17 call spread. And that could be worth $5. So $1.25 make $3.75. That's 3-to-1, and you don't have to look. So you paid $1.30, $1.25, and you literally do not have to look for the next 10 months. And you have TEVA TEVA upside at 3-1 for $1.25. To me, that's great. I was looking at the because they were looking at the high teens. I wanted a higher strike, so I would have said the 12-20 call spread, just not to look. It's sort of like it's priced right, and it looks like you can get that at $1. Call it $1. What is that? The 20s. Let's see here. The 12-20s are call it 55 and 210, so 215, so $1.60. So for $1.60 to make $8.60 to get back 8, so that's $1.60 and 640 is how much? 4, right? 4 times. So 4 times 4x. So all right, so do that instead of stock, and then just take that $11 million. Go play some marijuana stocks if you want. Go do whatever you want with the money. You know what I mean? Like go do whatever you want, and don't look at TEVA. Just don't look at it. It hasn't done anything for 2 years. It's building this base. If it goes to 5 or 6 again, and again, why couldn't it? If it goes to 5 or 6 for whatever reason, then you know what? You start buying stock, and then you're out of these things at 20 cents, whatever. You lose $1.25, but you're not going to lose $4 or $5. So this is good risk reward. So I know it was just coincidence that happened, but you know it's how people would think when the stock goes down 2 days in a row and saying, you know what, I don't want to be long the stock. Right? That's how they think. I don't want to be long stock. I want to get a stock, but we kind of like the story. So just buy this, and that's how I'll trade.
Nice.
Okay. All right. Love good. Let's answer any questions.
Yeah. Okay. Just put in the chat. If you guys have any questions, let us know. And then let me see if I can find some from before.
This open stock, huh? Somebody's saying Open Door Technologies.
Open, yes.
So open I mean, it's been trading well. It's been trading well. It's back on the back of Zillow. Zillow was good. I think look, it's actually pretty cool stuff. What they do is, do you know what this technology is? They basically, I think Open was the first, and then Zillow followed them. I believe it's that they have this technology that basically bids on your house. So you don't even need a buyer. They'll buy that. They'll buy the houses. Zillow would buy it because they know what the house is estimated to be worth. And so if you want a quick sale, you could just sell that, and then actually, they find a buyer very quickly. And not only do they make the commission, but they actually make the bid offer on the house. It's sort of like really flipping houses, and they're using technology to learn what your house is really valued. Now, it sucks if you actually paid $100,000 for your pool and nobody cares about a pool, then that $100,000 is not going to be reflected on Zillow's estimate, right? They're going to look at, all the houses in the neighborhood. It's nice that you have a pool, but all the houses in the neighborhood are valued at $800,000. Your house is going to be $800, and we'll give you $10,000 for the pool, right? Meanwhile, you just spent $100 to build this whole backyard, zoo with a pool for the kids, and nobody cares. Nobody cares. So it's good if you just have a plain Jane house in a good neighborhood, and it's 800,000, and Zillow says 800, and you don't have to sell it. You don't have to have open houses, nothing. You just basically say, hey, here you go, boom, boom. We'll pay you $792, right? $790, and they'll look at the house, $792, and you say, okay, well, I'll sell that to you, and then 2 weeks later, Open Door or Zillow, they sell the house at $810 or $815, and they make that spread, plus they make commission from you, plus they make. So that's this new technology that they're doing, and hey, that's what happens. Regretting putting a poll, yeah, David, yeah, I know me and many friends. It's crazy how much pools cost. Anyway, so I would say I love Zillow. We've traded Zillow before. We didn't catch this big move. I'm a little annoyed, to be honest, about Zillow. But once it goes, you can't catch it. It's kind of gone, and then you got to reach, and it's hard. So I like Zillow, the Zillow story. I liked it. Zillow and Open Door are basically the same thing. They're going to put a lot of pressure on the brokerage companies, but also that brings in one of the names for mortgages, which is Rocket, which still hasn't got its mojo. But I'll tell you what, one thing to look at, and don't forget, we're in this week where what comes out? It's the week of February 15th, besides Valentine's Day, which my wife won't make me forget. Hold on, let's see. I'm so interested in figuring out what BlackRock owns, and she's like, what's my Valentine's Day? Not going to be good. So let's see, what is it? Holdings channel. Okay, Holdings channel. And we want to let's look at pick any stock. Okay, let's look at Rocket. So BlackRock is there now, and when I saw this I thought, oh, that seems a little bigger than what they had before. Actually, you know what? I can go back to. It's always a little slow for me, this thing. So if I go to, if you can go here and you could sort of see. All right. Well, one, don't look. One, you can go down here and see Rocket holding changes to see who actually stock, and we see right here 5 million shares bought in the quarter by BlackRock. So BlackRock is starting to get in this name. They're in the name. They will support the name where they bought it. So this is something that is a positive development for Rocket. I like Rocket. We bought calls and most people got stopped out, and I get it. And it was no worries. But at the end of the day, I do like this company. At some point, they're going to figure it out like they figured out Zillow and they figured out everything else. Rocket is an AI company. It's data, and they're doing a great job because they have a better answer than everybody else. They have more data, a better answer, a better marketing approach because of the data, and they are doing everything with they're doing everything in their power to engage the brokers. I think it's a good stock on many different fronts. It's just going to take time for people to say it's too cheap to actually to leave it down there. So maybe BlackRock said it's too cheap to leave it, even though we don't want to make this guy rich. It's too cheap. The CEO, the owner, it's too cheap to keep it down there. They're doing great things, and once people give it a couple of quarters, and this thing could explode, just like the Zillow did. Just like they're using technology. Zillow's doing nothing more than using technology on an app, creating estimates. It's all algos and all technology. It's not about real estate brokering and housing. It's about technology and leveraging that technology with data. So Zillow, Open Door, but then on the mortgage front, you have something like a Rocket. But again, besides this, so you see that in Rocket, I wanted you to take a look at, let's take a look at BlackRock's, all stocks held by BlackRock. Okay, so we can look at BlackRock's portfolio, and remember, December 31st, 45 days after December 31st, every fund is required by SEC rules to put their portfolio out there for everybody to see. It's called the 13 Fs. So if you look at BlackRock's portfolio in the final quarter, you could see sort of a little bit of a trend. They were selling some of their Apple. They sold calls and stock, only 13 million. I mean, it's not huge, but you could see they're taking some off. They took some off in Microsoft. They took some off in Amazon. They added Facebook here. They took some off in Alphabet, added to Tesla, probably they may have already gotten out of this or some of this into the trade. Who knows? But you could start seeing. And so I tend to want to look at this. So I would tell everyone that they should sort of get comfortable. BlackRock is the biggest guy in the block. So you should actually, not consider a hedge fund, but they're the biggest guy in the block. So you should understand a little bit about what they're doing, maybe spot trends. In that case, I think, when you look at the big names that they were selling, and then let's just take a look real quickly at Apple, they're selling in the the fourth quarter. So they're selling here, October, November, December. And you can see that the stocks don't do that much. It goes sideways. So look at Amazon. And we spotted this when we talked about maybe a tech rise in the next, couple of quarters, because this is doing nothing here. So they might have been, they were selling a little bit of Amazon here, a little bit of Microsoft they were selling in the fourth quarter. So you see how the graphs sort of reflect a little bit about what BlackRock was thinking. But I think a lot of the bigger funds were probably doing similar things. Again, not getting out of the name, just reducing a little bit. Okay. Managing risk reward.
Yep.
Any other questions?
See.
Questions? I think that
what about this one?
Don't know if the best practice is to unwind to realize the profits at the moment, but buy some puts or just roll, losing the opportunity of the mega pop. Really appreciate the insight on this. Okay. Great question. There is no right answer, right? I don't know if there's going to be another pop. You don't know. Marco doesn't know. No one knows. No one knows. Anybody tells you they know is lying. So the only thing we can do is sort of manage that process and have a little bit of a plan. So if you want to let something run, no problem. My only question is always going to be, what's the plan? What is the plan? At what point do you say, maybe we're going to get out. And I hate doing that during the moment of the trade, because then you start thinking, well, maybe we leave it, the plan changes, right? It's, you become emotional, and then you say, I'm going to sell it here. Then it gets there and you're like, no, it's got to bounce. It's like, that wasn't the plan. The plan, you don't keep changing the plan wherever the thing is and what you think. That's not a good plan. The plan, it's all about having an idea of what the game plan is. And on all of these, look, on every time we enter a trade, the belief is that we're going to catch a trend, it's going to move, and we're going to be getting out, and we're going to let the last part run. If you let the last part run, you can say, well, I will be looking for this moonshot, or if it gets here at this level, I'm going to use a rolling stop at this level. Any one of those, if you have to be, the only way you will be able to catch one of these big moves is if you actually are able to hang in there. So what I would say is that if you're finding that you can't hang in there, that it's just not physically possible for you to do that because it's causing emotional stress, and then I would say that the game you're playing, the total dollar amount you're playing, is too much. It usually that's usually the answer. The answer is, I can't hold it. Why not? Because it's moving up and down. So it's too big. Your initial investment might be too big, or maybe the game is too big for you. Okay, because if you, in all of these, it always has to be like, if I lose 50%, it's fine. If I lose 4 in a row, 50%, it's totally fine. It's got to be that attitude. So, there are people, come to me with $100,000, or some people have $1 million, and they say, how big do I have to have? How much? I tell them, you can do a lot of damage with $100,000, $200,000. A lot of damage, on $1 million. 10% is more than enough to get started, get acquainted, and understanding how things move. If you're starting with $10,000, $3,000, $4,000 is starting to get on the lower end, but you want to feel the movement. You got to feel the losses, right? You got to feel the wins, right? If you're on Wall Street, nervous Nelly, nervous Nelly, and you're up 100%, you're like, I'm out, I'm blowing everything out. It's not the way to play the game. You take a little bit off, and then you keep going. So this is, the game might be too big, and so you're trying to play, not being so nervous. And part of that maybe takes practice on a virtual site, where you can actually practice a little bit and do it exactly the way you do it. Use percentages, just to feel it, and that way you could actually just see how it transpires and see what's happening. There's going to be times where we're wrong 4 or 5 times wrong. In November was probably the worst. October, November, we went hitting huge 11 out of 13 winners. Maybe some were stopped, so maybe it's 8 out of 13, and then you go through a period. I think I missed 9 out of 10. It's a disaster. I'm as frustrated as the next person. But at the end of the day, it's over a longer period of time. We're trying to play a process, and it's a probability game. And the probability game is to use the same process, keep digging, keep doing what we're doing, use common sense, and then use a plan, and try not to deviate from that plan. Because after doing 100 trades, if you've gone through your plan, you can look at what you've done, and you could start seeing, I need to improve on this. I need to let it run more. I'm not letting these things run more. Now, that does increase a little bit of the volatility, but it's the only way in this game. It's the only way to win, is to catch 200, 300, 400%. Not just on a gap, like ATVI gave us a gap. Okay. Right. Some of these, give us a gap. You're not always going to get the 200% gap. You're going to get the 100, 150 move. Then you're going to take some off. It's going to retreat a little bit. Then it's going to gap for the next one. And then it's going to catch. When these things catch, it catches a move, and then it just starts moving, starts going. It happens. Just go back. I put a book out there, the Winning Picks book, so you can actually see how these things transpire. And what we're doing, more often than not, we're trying to catch these trends. Now, how much we catch of the trend is a different story, but these trends, we're jumping in, whether it's up, whether it's down, we're trying to play it both ways. And there will be this trend where it's going down too. And so, I'm actively looking for things that will go down. It's just, there's not a lot. I'm trying not to give Felix's ideas. I'm trying to show you the market's ideas. I can give Felix ideas all day, but I'm not sure that's going to work. So, that's what I would say. And I would say, hang in there. And usually 9 out of 10 without even knowing how much you trade, it's usually that you're too big in the trade. It's too big, and that's why, because you're getting nervous and anxious, because when you spot that one, when you get that one winner might become a bigger part of your portfolio, and so maybe you're just playing the game too big.
Okay, good. Yeah, right, I felt that myself. I definitely agree with.
Yeah, that. Tomorrow maybe we talk about a small stack, a smaller account, and the pressures, to remind people the pressures of the pressures inherent that you inherit with a small stack, with a small. There's a lot more pressure that is put on you to be right. So we could talk about maybe that tomorrow, and that means that the game is too big, right? The game is too big for you to play right now. Okay.
Cool. Sounds good.
All right. Good.
And also, I want to announce to everybody that we got a great video coming up with some recaps from the podcast and all that. So you guys are going to be able to, get everything in one place so far, what we talked about. And yeah.
And show that we're going to make a clip of this beginning squeeze. Try to send that out. Try to show that to people. I'm trying to help as many people as possible. And something like that, I think, might be able to help, the average investor at least understand that not everything that you see in unusual options activity is, for you to go and chase after and put your hard-earned money to go after that. So I'm asking us to share that and show that to people. It'll be a clip of 10, 15 minutes that goes through reverse gamma squeezes in the Tesla situation.
If you know anybody that, told you about this, what's happening in Tesla, this and that, make sure to send them that video and, just warn them. Yeah,
cool. Awesome. Thank you, everyone.
All right. Thank you, Felix. Thanks, everybody. We'll see you in the next one.
Be good.